Okay, I think we're live, mate. How are you?
Nice. Getting more savvy with it.
Exactly. Got myself a herbal tea. I haven't
Yeah,
gone for a second coffee yet.
you copied my idea. I
I
messaged you
did. I
saying
did. I must say.
I messaged you saying, "Oh, just bear with me 5 minutes, Andy, just while I get a cup of tea." I joined earlier, and there you are,
Yeah.
late because you're
But
wanting a cup of
what kind
tea.
of tea have you got, mate? That's the
Well,
important thing. I've got an immune boosting one. You've got PG tips probably with cows.
no, Tetley all the way.
Teddy. Well, there you go. I'm not far off. You've got something against monkeys, have you?
Clearly.
That's the only logical reason I can think of.
Yeah, the only logical reason. Blimey.
What's happening, guys? Let's
And
see.
guess
Here
who's
we
in there first?
Slav. He's just a
Nobody can
genius.
beat this man.
Genius. I don't know how he does it. And
He's even
no,
first on Facebook as well.
yeah, with another headset. That's his live status right now. He's listening to us like that. Pretty impressive. I think you should do that.
Yeah, you can.
Maybe try and trade like that if you want to just show off a bit.
Yeah. God. We've got Laszlo in as well. Hey, Laszlo. Hope you're doing well, mate.
So, yeah, I can see there's a few more people live. So just let us know in the comments, guys. I think you've got your StreamYard link as well if you want to show your name, because we won't be able to see your name. But let us know how you guys are getting on. And yesterday we jumped on live. If you haven't watched that, it's in the group, and we answered a lot of your questions. And there were some questions that we didn't quite get to that we'll answer today, and we'll also talk about a little bit about price action versus indicators, which is something that I did a video on and posted again. So check that out if you haven't yet.
Awesome stuff. Yeah, so I mean, we might as well crack on. I mean, I don't know if we'll get more people. People are probably either on their lunch break or hard at work. So I think it'll be good just to kind of cover off a couple of questions that we had yesterday, if that's cool with you, Andy, and then we'll jump into some lovely price action stuff.
Yeah, no, definitely. Just reminding you guys as well, just make sure you register for the Thursday live that we're doing at 8 p.m. We'll put a link in if you haven't registered yet. So that's going to be on Zoom. So you need to register. It won't be streamed in the group, or there's no plans to stream from the group anyway. Hey, Jeanette, how are you? From Australia. It's quite late there now. Must be 10.
Easily
10. Maybe later.
Easily.
Yeah, that's like my bedtime. I couldn't concentrate.
After your afternoon nap.
Life with kids. 10:30. There you go. See, got it right. So yeah, let's crack on. So I know there were some questions. I remember there was one question regarding. Was it regarding scalping and day trading?
It was a pretty simple question. Which is better? Do you prefer scalping or day trading? I think it will be good to kind of let people know what the difference is between the two, if there is one as well.
Yeah, I mean the similarity is that they are both trading for the day. So you are closing your trades out for the day. The differences are that with scalping, the time frame that you're looking at is smaller. The moves are smaller, and what you're generally doing is you're taking a lot more trades during the day because the time frame is smaller. There's more opportunity. So if you imagine like you're playing support and resistance on a 4-hour chart, you might get one opportunity in a day. Whereas if you're doing it on a 1-minute chart, you may get 10 opportunities in a day, just to keep this simple. So there's more to it. There's more trading. There's more activity with scalping. And personally speaking, having done all types of trading, including swing trading and scalping and day trading, personally, I think scalping is for the very, very few. And it's something that is definitely in my makeup. I've done it before, but it's very, very intense. It's quite a stressful thing to do because basically your brain can't switch off. It's got to be switched on continuously. So you can't do it for too many hours. And I also think with scalping, although it's great, maybe for people that are single, got time, and are very, very fast paced, I would say, some of the core skills that you need. I think in the long run, it's not going to give you a lifestyle. You're going to be basically hustling to make your money continuously. So for that reason, my preference is either swing trading or day trading out of the options. And my total preference, if I'm honest, is day trading because I think for those that have families and have other things going on, I think being present and having that time away from the markets, knowing that your positions are closed, there's something really nice about that. Win or lose, it's like there's no more risk on the table. Your job is done for the day, and then you start again the next day, and then your brain can just switch off from the markets. Whereas I think if you don't have that, I know personally it's very hard to switch off. You can't help but just look at the price and see what's going on, and that time should be being spent doing something better than just continuously looking at your phone. Do you see what I mean?
Yeah, I think something to kind of add on to the back of that as well, Andy, is naturally, I think a lot of people are drawn to like the scalping side of things, and I think it's got a kind of psychological impact on us all, because when you're looking at low time frames and one candle is only a minute long, you look at that opportunity and think, wow, I can make $700 in 30 minutes, and it sounds really, really appealing. And we have a lot of people that come to us that are complete beginners, and they've jumped into scalping basically straight away. And they ask themselves the question, like, why aren't I making money? Why aren't I consistent? Why am I losing more than I'm winning? And the reality is that the psychological side of us wanting to kind of make money as quickly as possible with kind of minimal effort, it actually kind of impacts us negatively, because it requires so much more work to put into scalping, and it's so much more of an emotional drain as well. So I guess kind of my best sort of recommendation for anybody who's starting out in trading is, although scalping seems fantastic at face value, the reality is it's going to be really, really difficult for you to make consistent returns. If you're wanting an extra lifestyle, if you're wanting more flexibility, going down the swing trading and day trading, getting in the morning, getting out in the evening, that can work as well. But it just gives you kind of that overall lifestyle. Don't let your emotions take over you in turning around and say, oh, I want to make $700 in 30 minutes today, because it's going to be difficult for anybody to do that, let alone a complete beginner.
Yeah, I mean, emotions are much higher when you're taking multiple trades. And the other thing to remember is when you're trading off small time frames, generally the signals are a lot worse. The signals are not so reliable. So, a support or resistance level or candlestick formation, the reliability of those things goes down the lower the time frame, because they're not that significant. But anyway, like, I think the other thing that we the video that I did recently was on price action, and I think it's one of the most common things that I see. Most beginners want to rely on indicators, and it's quite interesting because I've always kind of wondered why that is. What's your thoughts on indicators and why beginners kind of go to them over, say, price action?
I think it's for ease. I think as humans, as kind of the way we're built, we always try and look for the easy way out, or kind of the easiest way of doing things, and it doesn't necessarily mean that it's the best thing for us. And you see it all over social media. Try this indicator, it gives you 90% win ratio, or try this indicator, that indicator, and it makes it seem like you don't need anything else. But I find it quite funny because the focusing on an indicator, it literally says it in the name. It only gives you an indication as to what is going to happen in the market. It doesn't actually tell you high probability what is potentially going to happen next. It only gives you an indication. It's only giving you a small part of the story, and it leaves you very, very prone to, making losses through fake signals. So when you're just using an indicator on its own, you're doing it because it's just so much easier that way. But then people end up blowing their accounts because they're not putting that kind of extra step of work in to invest their money in trades that are actually high probability. And I think something really important to note as well, Andy, in my plan, whenever I'm trading and whenever I'm looking for a really high probability trade, I always ask myself, before I press the buy or sell button, I always ask myself, do I have some sort of confirmation from price action telling me to take this trade? Because if I'm taking a trade just based off of 3 different indicators and nothing related to price action, the likelihood is that I'm going to lose the trade. And that's from my experience, and most likely yours as well. But it'll be great to know your thoughts on it too.
Yeah, I mean, just to give everybody maybe a tip of how I would approach things, if I was kind of just getting started on that journey, or you're not there yet with your trade plan, one of the first things I get my students to do when I start working with them is I ask them to give me their analysis of what's going to happen next without the use of any indicators whatsoever. So that makes you then have to figure things out. So what evidence is there just on the charts without anything else? So you can use, like, obviously support and resistance and whatever else, and you can use multiple time frames, but don't put in any lagging indicators, and try and figure out the picture of what's going on that chart. If you can do that, then with that basis, now you can use tools, and one of those tools is indicators, because they could just confirm or not confirm whether your thinking is correct. But your first experience of a chart, if it's done based on price, it's going to give you a great indicator of whether something is going to happen or not. And so when you add those trading tools, those indicators onto your chart, they're now coming on without them being the leading thought. It's like it's just going to confirm what you already think. And there's a huge difference in that approach, because your brain has had to work. It's not just been a simple thing where you just put some indicators on, because you need to think like, okay, is this market trending? Is it ranging? Are we in high volatility right now, low volatility? What session are we in? Are we in the London session, New York session, Asian session? Does this currency move at this time? What is actually going on the lower time frame, the bigger time frames? Just really get to know and understand, because there are tools that can be used for different situations, but not every tool is useful for every situation. So I've seen a lot of people, for example, have the stochastic indicator on their charts always. And when I kind of ask, why do you have that there? They're like, well, it just helps me to have it there. But actually, for example, if you've got a really trending market, that tool is going to be quite misleading because it's just going to be oversold or overbought for a long, long time. And so what it's doing there is influencing what you're doing without you even realizing it. It's putting you off a trade or making you take a trade, but actually that signal isn't improving the probability of your setup. So I've said this lots of times, and I'm going to say it again in case you haven't heard me say it. A tool is there to help you improve the probability of an outcome happening, but it's not there to make your decision. So it's not there to give you more confidence to take the trade. Because if you're taking lower probability trades, the reality is that you're not going to be a winning trader. So that's why I would really encourage you to try and identify opportunities without indicators. And then once you understand what type of market you're trading, then only add in relevant indicators onto your chart. So if you're trending, you can add a moving average. If you're ranging, you can add stochastic. And there's obviously lots of other indicators. So let me know, guys, if that makes sense.
Yeah, I guess also just to add on to that as well, Andy, is the way I like to kind of think of it is it's like making sure you have your own kind of personalized toolkit. And if you're constantly using the same tool for all of your DIY stuff, your DIY is going to be pretty bad. Like when you're in a trending market, we like to use moving averages, Fibonacci's, all of that good stuff. And like you said, the stochastic can be pretty irrelevant in markets like that. And I guess it's like trying to hammer a nail into the wall with a spanner. It just doesn't quite work. When you put the work in and you put the time in to actually figure out the market condition, you kind of put all the different puzzle pieces together. You can then figure out what tool it is that you need to use to make your decision in going forward with a specific trade. So we find with us, with students, some people like to just use one indicator, but it's about having your own toolkit. So for different market conditions, for different circumstances, you'll take a different tool out of your toolkit to go ahead and kind of complete the task ahead of you.
And I'd always say like indicators are, that bit is almost like, sometimes I think one of my students asked me if he could use the Ichimoku cloud. And, I kind of said, look, I don't use the Ichimoku cloud, but if you do the other stuff first, I don't care what indicators you use, because to be honest, 90% of the work has been done on what really matters, which is price. And, whatever other indicators you use, they're not leading your trade idea. They are just confirming your trade idea. So whatever kind of resonates with you and whatever you find useful that can confirm your idea, fine, absolutely fine to use it. So we're not we're not always saying just use the indicators that we use. It's as long as you do the other work correctly, then really the indicator is just there as a final confirmation and just to really improve the probability of your trade working. But if you've done your price action analysis correct, then the likelihood is that you're probably in a high quality trade anyway.
Awesome. So I guess, Andy, a question that we get quite often as well is we always say price action analysis this, price action analysis that. I mean, what's kind of a brief overview as to what you would usually include within price action analysis?
Yeah, I mean, essentially price action analysis is you are studying what is actually happening with price, and specifically, whether the market is, moving in one direction, whether the market is moving sideways. Also, where is the market stopping and reacting? Where are buyers coming in? Where are sellers coming in? In other words, where is the supply and the demand in that market? And then looking at it from different points of view. So when you look at a higher time frame, like a weekly chart, is about identifying, okay, where is this currency, where are the big buyers coming in, where are the big sellers coming in, and then as you go to the lower time frames, you can start to see little nuances and what is happening on the smaller time frame. So it's about just understanding price and where it's been, where it's likely to go, and you can study, like, for example, candle formations are fine, that's part of price, but it's really more about the levels, the trend or not trend, and identifying whether something's moving fast or slow. It's all about the price. And once that is clear in your head, then you can move on and say, hey, with the market doing this, these are the tools that I need. And, and that's how you kind of then incorporate trading indicators and stuff. So that's the way to do it. There's no other way to do it. If you are hoping, you've probably, if you're on kind of social media, you've probably seen lots of little clips of people saying, hey, this is my magic indicator. Look at this. It's just won this and it's done this and it wins 100 million% of the time. But it's advertised because people looking for quick solutions. And I'm not saying indicators can't be helpful. They will be. But if you don't do the other bit right, you're not going to actually achieve what you want, which is to make consistent money. So, so that hopefully that answers that question. I see, Dan, you've got your indexes at the back, which we're going to be talking about on Thursday.
Yeah, I do. I have this as part of my daily routine now, just getting an idea. It's mainly for me, it's about just time efficiency. Like I would much rather spend my time speaking with other people, coaching them, and also having a lot of flexibility with my lifestyle as well. Being able to go out, see family, being able to kind of go out, do what I want without having the stress of looking at the markets and my screens all day. So yeah, this currency strength index, it really kind of filters down my trading to probably putting in about 45 minutes to an hour a day, maximum. I'm not focusing on stuff that just isn't worth focusing on. But yeah, we'll definitely go into detail in it more. I'm sure, like we've said to all of you guys already, if you do want loads of information on it, Andy, myself, we're holding a webinar on Thursday evening. So I'll put a link in the comments. There are on previous videos as well, but just sign up to it, and we'll take you through some really cool information regarding that. I mean, one thing that I do want to focus on as well, Andy, is just another question that we had previously. And we speak about all price action and becoming consistent and making sure you go about it the right way. And once you put all of these puzzle pieces together, it then becomes about how do I make a good income from this, and kind of what opportunities do I have available. So we've actually had the question that people have heard that you don't actually have to trade with your own money in Forex in order to make a consistent income. You can go to a funding company, you can go to a broker, and they can end up funding you if they believe that you are a safe trader. But the main question is, why would a company like that lend such a large amount of capital to an individual? Would it not be a massive risk for that company to lend it to you?
Well, I'll kind of say this, is that there's a couple of things to this. Like, not really. The risk is very, very low. In fact, if you understand how most traditional brokers work, you'll actually realize that the majority of their money is not made. It's not made on the spread. I don't know if you know this, Dan. So obviously, when you've got a broker, they do make money on the spread. So the difference between the buy and the sell price, there's a difference, and then they get that spread. But actually, where they make money is using algorithms, and those algorithms track the trader's performance. So over the first 1 or 2 months, they'll track whether this trader is actually a good trader or a bad trader. And then they have what's called an A book and a B book. So an A book will basically follow a successful trader, and a B book will trade against a failing trader. And actually, that's how brokers make the majority of their money. And so for prop firms, they have the same kind of ability if they wish. So, if, for example, at the beginning of somebody getting funded, they could have a model where they go against that trader, for example, or go with that trader. So in essence, the risk for the prop firm is very, very low. And, and obviously, as we know, traders need to pass a challenge, which is obviously something we help with. And, once you've passed that challenge, you're kind of proving that you do know how to trade, but the prop firm can still doubt you for the first 1 or 2 months, and they will know whether to, based on their previous experiences. So they have statistics. So they say, for example, okay, out of the people that get funded, how many of them go on to make money for the first 3 months? Now, if that percentage is really low, they will optimize an algorithm to say, hey, let's go against the traders overall for the first 3 months, and then after 3 months, let's go with the traders that are still getting success. So they can make money that way. So it means it's a great opportunity for the average person, because the prop firm will stay in business, they're profitable. But if you're one of the good ones, then it means that you're going to have that money to trade, and it means that the prop firm will then eventually be making lots of money from you. So that's kind of it in a nutshell. So there's nothing ever to worry about. And of course, there are fees that they charge to take the challenges anyway. So they build a nice nest egg from the losing traders. As we know, most people gamble. Most people have been in forums. I know Darrell, who's with us as well, I'm always seeing him in these forums telling people, how to do stuff. Darrell's one of our recently funded traders, and I've seen you, Darrell, quite a few times, telling people to, telling people off that, that are gambling and just doing nonsensical things. He's learned the right way, and and I just think that's the reason most people are going into these things gambling. They're just wasting money. They're throwing their money away, taking challenges that they're not going to really pass. Or if they do pass, it's unlikely they're going to actually make a living from this. And and Darrell, actually, you got your first payout as well. He was really happy the other day. So congratulations. I know I sent you a message, but I'll say it here as well, because it's an awesome achievement. He got his first payout the other day.
Fantastic.
Yes, Darrell is laughing because he knows it's true. He's
coming to everybody's help on social media.
Yeah, exactly. So, guys, I think we'll wrap up. We're going to try and jump on again tomorrow. So if you guys want, put something in the comments. It's a great opportunity, to ask questions. Anything that you think will help you. Try and think of clever questions, something that will actually make a difference to you. And we'll do our best to answer it. And and Dan will be posting the link for Thursday's live webinar at 8 p.m. So you can post it into the comments. You've already done that already.
Yeah,
well done.
Just there now. Yeah, literally just did it as you were speaking. I'm ahead of the game today.
There you go. It's like we timed that perfectly. It's like almost there. It's almost like we knew what we were doing there, Dan.
Almost. Who knew?
But no, thanks for tuning in, guys. And we'll catch you guys tomorrow. We'll post something in the morning, let you know what time we can jump on live. And and like I said, ask your questions. Dan, is there anything else you want to say?
No, not really. Again, thanks for coming, guys. We're looking to go live tomorrow. Obviously, there's the link in the comments for you guys to join, get more info, and hopefully go into a lot more detail around all of your questions as well. But really appreciate you guys joining on it. I think it shows that how serious that you guys are about kind of making a change and really getting involved in it. Feel free to ask us any questions, pop them in the comments. Any questions that have been missed, I don't think we have missed any today anyway, but any ones that you have, even watching the replay, just put it in the comments. Andy and I will gather it for the next live, and we'll go over a few more questions before our big Thursday extravaganza.
Exactly. Awesome.
Cool.
Have a good one, everybody.
Thanks for coming, guys.
Take care.
See ya.
Bye-bye. Bye-bye.